think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we're going to look at one of my favorite macro thinkers and investment strategist, Lyn Alden, and her prediction on 2022. So Lynn is a great person. She actually spent time to come on our show last year, and she has grown exponentially just over the past year. I mean, her Twitter following is blown up and everything, you know, her interviews on YouTube, she's been on London Real and all these different things. And so I'm just very appreciative of her coming on our channel last year. And so we're going to dive into what her outlook is on 2022 and kind of just pick what we can from there and see how we're going to set ourselves up for success. Now, I do want to say that Lynn does have an investment newsletter. She does have a free one, and she also has one that's a paid subscription. It only costs about $25 a month. And so that is actually pretty cool that she does that, and it's affordable for a lot of people to be able to know what's going on in the markets. And now she has made a lot of good calls, especially in regards to certain particular stocks. She reveals her portfolios. I've been able to profit off some of these stocks and everything. And so I encourage you all to go check that out. So let's go ahead and dive in and see what she is thinking in regards to what is going to happen this year in the markets.
So that brings us nicely on to the big hot debate right now, and that is inflation. So US figures just came out, and they're now the highest in 40 years. So what do you think happens with inflation in 2022?
So I think it will stay elevated, but probably go down from these numbers. And so depends on what country you're covering. So I cover globally, but my focus is on the United States. And we've had, among the developed world, some of the largest inflation prints because we expanded our money supply more rapidly than most other countries did in 2020, 2021. And my overall base case is that somewhere either in quarter four, which we're in now, or quarter one of next year, we'll probably see the top of the headline CPI prints, and then we probably will cool off for a period of time. That doesn't mean that we go negative, doesn't mean we go back to normal, but I think some of those issues could begin to subside. We're already seeing, for example, that real estate is kind of topping out, and there's a big component of CPI that is tied to real estate, and that's following that with a lag. And so when that kind of gets topped out, that could cause kind of a cooling off of that headline in CPI at least. In addition, we have money supply not growing as quickly as it did, say the peak of the rate last year. In addition, a big component was used car prices going up dramatically because we've had semiconductor shortages. And so we see signs that there's a lot of inventory for cars at manufacturers. And of course, they just haven't gotten to the dealerships yet because they're waiting on those semiconductors. So whenever that semiconductor issue gets resolved, which is this line, it's going to take a few years, that should be a disinflationary burst for the used car and the new car segment, right? Because you basically have a lot of that kind of stored up inventory coming to market. And so I do think we're going to see gyrations in inflation, kind of like how we already saw a gigantic lumber spike and then that cooled off and then it kind of rose again, while other areas of inflation, mainly the real estate segment, started kind of steadily going up. I think we're going to see rotations like that. But overall, I think that especially with fiscal policy pulling back and monetary policy tightening, I do think that we can start to see a cooling off of headline CPI. Now, Europe is a little bit different because Europe has these energy shortages, which are rather spectacular. And so when they get past those, right? So when you get past the winter months, for example, you start to see kind of, again, CPI kind of cooling off, maybe with a bit of a lag compared to the United States because their inflation started a little bit later and might end a little bit later. But overall, that's kind of a wild card because those grid and natural gas issues are so unique.
All right, so there we have Lyn Alden's prediction on 2022 in regards to inflation. And so she believes that it is going to top out at the beginning of this year, and then we're going to see those numbers cool down because things like the semiconductor shortages are going to begin to resolve itself. as time goes on, and we're going to see that those parts of the inflation is going to actually help cool it down. We're going to see real estate prices actually begin to fall a little bit, and that is going to actually help inflation cool down as well. And then we're not seeing as much M2 money growth, which is how much money is being created out of thin air by the Federal Reserve, which they discontinued the chart for a while and everything. So it's just crazy. But and we know that as more money is being created, the money that we have has less value. And that is what inflation is. So you have the inflating of the money supply, but then you also have the devaluation of the dollar, which we're seeing that happen in prices. We're seeing prices going up, and we can't buy as much with our dollars as we used to. And so Lyn Alden is great. She's a great researcher for sure. She's super brilliant. And her outlook on inflation for 2022, I am definitely in agreement with. And I think that that is going to be a contributing factor as we go forward. I do believe that energy prices in Europe is going to definitely continue to go up and rise. I do have some stocks in Europe for energy, oil, and natural gas. And so I am expecting those prices to rise over there, and they are struggling over there with inflation. So let's go ahead and get into the next part.
Okay, so moving on to 2022. And let's talk about asset allocation. So investors have mainly got 7 major asset classes: stocks, bonds, property, cash, commodities, alternatives. And a lot of people on this channel are interested in crypto. So we'll get to crypto shortly. So would you mind sharing a rough asset allocation for next year? Should we start with stocks? What's your outlook for stocks, and how much are you roughly allocating for next year?
So I think different investors obviously have very different areas of expertise, very different risk tolerances. I tend to be equity heavy. The equity market tends to be where I feel most comfortable, that I've done the most research, that I like having a lot of my capital in. So I tend to always be equity heavy, and it really comes down to what areas of the equity market I think are attractive. And so, for example, in the past, say few months, we've had the healthcare sector not performing very well, and partly because there was impending legislation in the United States that could push down drug prices. So that obviously affects American drug makers, but also, a lot of the European and other large drug manufacturers, United States is their big lucrative market, because we pay more for the same drug than most other countries, kind of just how we've structured things. And so, if that were to passed, especially some of the more, so there's like a spectrum. Some of them are really kind of, sweeping changes, but of course the ones that can actually possibly get through the Senate are watered down. And so as that's kind of gone through, it's become increasingly clear that if something gets through, it's not going to be transformative. And so I think a lot of those got really cheap, and they're actually pretty attractive here, especially because in a period where markets might not do as well, like 2022 compared to such a strong period in 2020 and 2021, healthcare tends to be a more defensive area. And then you combine that with the fact that valuations are attractive. I do like that quite a bit. I also think some of the consumer staples, some of the energy pipelines, basically some of the lower volatility dividend type plays might be a good place to be for 2022, at least for a part of a portfolio. So that's kind of an area that I'm inclined towards. I think, again, going back to cash, I think having some either inflation protected securities or short-term ones that are kind of, they could be used as like cash equivalents, or just outright cash or short-term bonds. I think having some of those is useful because you can rebalance that into any volatility that happens for assets you actually want to own.
All right, so there we see Lynn is talking about the equity markets, the stock market, and she talked specifically about healthcare stocks, and energy stocks, and some of the consumer staples. And she mentioned that healthcare stocks were beaten down because Congress had a law that was trying to be passed, and pretty much they didn't want to pass that law. It was some gridlock that happened there. And pretty much they weren't able to control the prices of prescribed medications or medications in general, because we do pay more for medications here in the United States versus in other countries. And so Lyn Alden actually mentioned that in her thing. And I can say from firsthand experience that Lyn Alden did put out some newsletters regarding the healthcare sector and some of the healthcare stocks that she was investing in. She put these out a few months ago. I was actually able to get in on some of these stocks, and I saw these stocks go up tremendously. I mean, one of them being CVS. I saw CVS go from $80 to $103. And so I was able to participate in that. And so, and I'm actually holding on to that because I'm expecting it to go higher because the sector's been beaten down quite a bit. And so she is actually spot on with the healthcare sector. The other thing she mentioned is the energy sector. And we kind of talked about inflation with energy and things like that. We're seeing that there's still an energy crisis over in Europe. We're seeing that energy prices continue to increase over here. She also put out a chart that showed how when Joe Biden had released some of the oil reserves, how that is usually more inflationary. And that was actually alarming because I was able to see like, okay, whenever the president comes out and says that they're going to tap into the oil reserves, this actually pushes the prices up higher. So energy is going to increase. I mean, we still have the uranium narrative that is still at play, and we've seen these uranium stocks go up. I mean, there's a lot of volatility, but they go up, they go down, you know, and they go up higher. They're way higher than where they were a couple years ago or a year ago. You know, and so when we're looking at these things, we're seeing that the energy crisis is going to continue to spike as well. And other stocks that are going to benefit from inflation are some of these consumer staples. And so I am looking into those sectors, as she mentioned that that is her perspective on equity markets going forward. She also mentioned that equity market could do a 10% correction. We talked about a correction in my last video, which was really about the Fed tapering and how the market gets spooked or whatnot. We can easily see that and see the market correct 10%. And it's good to have some cash on hand so that you can actually be able to participate and buy some of these stocks that you like cheaper. And so those are some things to really look out for 2022 from Lyn Alden.
Yeah, one of the key things that I look at is the 4-year Bitcoin cycle and the stock to flow model. And what it basically says is that if history repeats, then next year is the time we're going to get this cycle top and also a big potential crypto winter. So what are your thoughts on a potential cycle top and crypto winter and navigating that for investors?
So I think it's a decent possibility. One thing so a lot of people have been following the stock to flow ratio, and one thing in markets, if everybody's kind of following the same thing, it's almost guaranteed not to happen, right? It's either, and I was like, I don't even know, it could happen where everybody follows it and wants to sell at the same time, and then it just doubles from there, right? It could overshoot to the bullish side because everybody's like, oh, I gotta get out now because stock to flow says so. On the other hand, if everybody's expecting it to go up to a certain number and they're buying with that in mind, it might never get to that in that year because everybody was expecting it to and already kind of piled into that. And when it starts to not materialize, they get out, right? So markets have a way of kind of messing with the consensus. And so really it's about demand. You know, we already know Bitcoin's supply cycle. The question, well, what we don't know is demand, right? And that can be, especially now that it's big enough, institutional demand matters a great deal. And so it's very tied into the macro conditions. And so overall, I would say that most indicators, on-chain indicators, did not get as bullish as 2017 or 2013. So we've not really had that huge blow off top. And so I'm not really in the camp that we're already in the crypto winter, for example. I do think we probably have more in the tank. I don't know if it's going to happen in 2022, 2023. One thing I would caution is that as the halving, basically as new supply starts representing a smaller percentage of Bitcoin's market cap, I think the halving is going to become less important over time. So I think the prior ones were all super important, and it was part of my thesis for investing back in spring of 2020. But I think that future halvings might be less important, both for bull side and bear side. And so basically that there's just less supply coming in from that. I think the big cycle to watch will be the holder distribution cycle. So if you look at say, supply not moved on chain for over a year, or you can even narrow it to certain bands, like not moved for a year or two, not moved between 1 and 3 years, not moved between 3 and 5 years. There tends to be this distribution cycle where people buy in, then they have diamond hands, and they just they hold for a few years. Bitcoin goes up 5x, 10x, in a very volatile way the whole time, and then some of those have life-changing gains at that point. Bitcoin's like half of their portfolio now, and so they start distributing into that strength when basically they've kind of taken a lot of supply off the market. They've kind of contributed to the next cycle happening. More people come in, and then they sell into that strength, and you kind of get that distribution cycle. So I think that's going to be probably a key cycle to watch going forward, maybe more so than halvings, even though historically that's been tied to halvings. So you kind of had that go together. Having's kind of served as a catalyst to go along with that distribution cycle. And I think that signal could deteriorate a little bit, and really kind of focusing on that distribution cycle makes sense.
And as everyone loves a good price target, how high do you think Bitcoin can go next year?
So, I mean, it's tricky. I think it's got 100,000 in it. Again, I don't know if it's gonna be 2022, 2023. I try to avoid price targets of Bitcoin because it can just blow past them, right, in ways that are shocking. And so when I invested in April 2020, and then I wrote an article on it in June, for example, I kind of referenced the 30 to 50,000 range as a target I was looking for, but then pointed out 100K would in no way be shocking. And I was asked about it in say November 2020, when it was, what was it, like 300 billion, and my view was that I think we're going to $1 trillion market cap, and so we hit that target. Now, a couple times in 2021, when I was asked about it, I said I wouldn't be surprised to see 100K by year end or 2022. We obviously, we still have a couple days left in the year, but that seems likely off the table. So I think we're 100K is still a target that I expect to reach eventually, but I try not to be too, it's guessing if I try to guess when it's going to happen, especially because Bitcoin is now tied into the broader macro space.
All right, and there we have it, Lyn Alden's prediction on Bitcoin in 2022 in the crypto space. She did mention that a lot of people do follow the stock to flow ratio, and the markets can actually shock people. People begin selling, and then the market of crypto increases or whatnot. And so the market does have a way of playing with the minds of the consensus. And so she is saying that Bitcoin could potentially hit 100K this year, if not next year, and how the halving cycles of Bitcoin, how much Bitcoin is mined per day, is actually cut in half, will not play as big of a factor into the bull runs or when the bears come out. And so that is Lyn Alden's prediction on crypto going forward for this year. So Lyn Alden is very brilliant. She actually has some really good predictions. And she really looks at things objectively. She looks at charts. She studies this stuff, and she's very experienced. And so I'm looking forward to seeing how this year plays out and how it relates to what she has said in this video. And so if you like this video, be sure to hit the thumbs up, hit the subscribe. I want to thank you all for joining me today. I'm going to link this video in the description below. Be sure to go check out the YouTube channel that it was featured on as well, because you got to support each other. And so I want to thank you all for joining the Money Level Show today, and you all have a good day.